high. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is the 21st of December and I am Ruchika Chitravanshi. Our cover story this week explores whether the RBI's move on unsecured credit hit financial inclusion. For Bankers View this week, we have the Chairman of State Bank of India, Dinesh Khara. In Banking for You this week, we explain what is provisioning. Tamal Bandhopadhyay, our consulting editor, speaks to us on the health of the banking sector and more in Expert Take segment. At the end of the show, we will tell you the results of last week's poll and the question for this week. About a month ago, the Reserve Bank of India increased the risk weights on exposure of banks to consumer credit, credit card receivables and NBFCs. This was done to protect the banking system from a build-up of risks and put in place some safeguards to avoid future stress. The move, however, has raised the question about financial inclusion. In our cover story this week, Raghu Mohan gets into the depth of this issue. Will the RBI's move on unsecured credit hit financial inclusion?
The Reserve Bank of India's move to hike the risk weights on bank exposures to non-banking financial companies or NBFCs by 25 percentage points may trip the financial inclusion story. In recent years, NBFCs or shadow banks have stepped up to service a largely unbanked audience, be it enterprises or retail customers. RBI's decision was aimed at cooling down the unsecured credit market, but its impact may be elsewhere. The Finance Industry Development Council, a lobby group for shadow banks, has said that it will affect NBFCs which have little to do with consumer credit. These NBFCs serve micro, small and medium enterprises. They serve vehicle finance and categories of loans that have been excluded from the purview of the RBI circular. So what happens to financial inclusion?
Arriving at the financial inclusion, first we need to understand the status of financial inclusion, and I quote Global World Bank's Global Findex data, which mentions that, account ownership at the age of 15 years plus is for India is 77.53%, and for females is roughly 10%, and males is roughly 12%. And borrowing from friends and relatives is roughly 35%, which means that informal sources borrowing. Now, there was a recent report of CAFRAL which came up and which also, made a mention of multiple things. But the important piece which I want to share with you, which actually helps us to construct this financial inclusion thing, is the credit impact of fintechs, the consumption impact and the credit impact, which is the highest in case of fintechs and NBFCs. What will happen with this is more likely when we discuss with our members.
As for retail, data from TransUnion CIBIL shows that small ticket personal loans of less than 50,000 rupees account for 0.3% of the total retail loan book size at the systemic level. But though delinquencies on small ticket personal loans have a marginal impact on the personal loan portfolio, these need to be monitored closely, especially because consumers may prioritize other payment obligations ahead of personal loan payments, which in turn may be a wider indicator of financial stress. Where do folks who avail of such credit go now?
Who otherwise find it difficult, and households in India are exposed to different kind of risks and shocks, and they borrow to smoothen their consumption over a period of time. So for that segment of customers, they may find it difficult to have access to finance. And I just quoted the data from World Bank Findex 2021, which gives us an impression that about 30 to 31% of borrowings are from informal sources, where roughly 10 to 12% borrowings are from the formal sources in India. So that's what the data tells us. So financial inclusion, of course, if the agenda of financial inclusion is, providing access to finance to these set of customers, and especially thin file first time entrants into the job force who want to get an access to credit for consumer finance. So it will be difficult. There will be some level of exclusion.
To be fair to the RBI, the credit industry landscape has changed significantly over the last 4 years. Since Jan 2022, small ticket personal loans of less than 50,000 rupees, while representing a very small share of total retail balances, have accounted for approximately 25% of total origination volumes. As a result, the proportion of credit-active consumers availing of small-ticket personal loans increased to 8% in the quarter ended June 2023 from 3% in the same quarter of 2019. In Q2 2023, 51% of consumers who availed small-ticket personal loans already had more than 4 credit products when availing another new loan, compared to just 17% in Q2 2019. Clearly, there are no easy answers when it comes to financial inclusion. Perhaps the RBI could brainstorm with regulated entities to arrive at a solution.
In this week's Banker View, Manojit Saha had an exclusive chat with Dinesh Khara, Chairman of State Bank of India. Khara said that SBI expects to maintain 14 to 15% credit growth in the current financial year. Listen in to know more about his position on the increased risk weight of unsecured credit, loans to NBFCs, and more.
Hello and welcome to the Business Standard Banking Show. The banking sector is going through an excellent phase. Profits are rising, bad loans are coming down, capital positions are increasing, and business growth is very robust. But will the good time last? The Reserve Bank of India has recently increased risk weightage for unsecured loans. To discuss some of these issues, we have today a very special guest. Dinesh Khara, Chairman of State Bank of India, is with us today to discuss some of these issues. Mr. Khara, welcome to the show.
Thank you. Thank you very much.
Before I come to the domestic factors, I would like to ask that the US Fed has paused and they have indicated that they could bring down interest rates from next year onwards. Do you think domestically RBI will be in a position to cut the repo rate from next year?
Well, RBI is very clearly focused in terms of looking at our domestic inflation rate, and we are still at more than 5% of the inflation rate. We have seen that in the past also. As far as our monetary policy is concerned, it is quite decoupled vis-a-vis US. But yes, of course, it's a very positive indication when it comes to FOMC, Fed having indicated that there are likely to be 3 rate cuts. We are hoping that maybe somewhere from the middle of the next financial year, maybe we'll perhaps get to see some reduction in interest rate, but it is subject to the inflation trajectory moving towards 4%. So I think we'll very closely wait and watch how the things evolve going forward.
Now let us come to some of the regulatory aspects that Reserve Bank of India has initiated. For example, the increase in risk weight. While banks are in a very good in terms of capital, they may not have much impact on capital. But what is the message you are seeing?
I think the message is very clear. Growth is good, but effort should be for the healthy growth. Unhealthy growth is something which can prove to be having a negative impact on the economy. So that is not intended. And with that in mind, this kind of a step has been taken. But I think this message has to be read in the context that even earlier also, before COVID also, the unsecured credit was subject to under 25% RWA. And during COVID only it was brought down to 100. And since the COVID is behind us, so I think that we have gone back to 125. So I read the message in that context.
Do you expect some slowdown in growth of the unsecured loan credit?
I think retail, particularly unsecured, was growing at a very fast pace of about 30-33% in the system. We had slowed it down. We had come down to about 18% 17-18% we had come down to. And we expect that we will continue to grow at that pace. We had already slowed it down.
And loans to NBFC, are you planning to slow down that also?
No, it's not that we are slowing down, because we have got a portfolio which is about 3 trillion is our total NBFC portfolio. But out of this NBFC portfolio, very significant portion, as high as about 2.7 trillion plus, would be actually to very well-rated NBFCs. Some of them are government-owned, others are supported by very strong financial groups. So, very strong industrial groups. So that is something, that's the kind of a composition. So, but I would say that we have been very conscious while we are lending to NBFCs, and we have strengthened our underwriting practices for quite some time. And I would also mention that of late, even RBI has strengthened their oversight, and have also come out with the guidelines for the NBFCs, which actually enhances the confidence of the lending community while they are lending to NBFCs. So I think it will not really have any impact for us, but yes, of course, the increased RWA means that the cost of credit will go up for these NBFCs, depending upon the kind of a risk which is there.
Now, coming to the business of the bank, till September, the credit growth was extremely robust, 12.4%. Do you see that this kind of credit growth to continue for the remaining part?
I hope so, because when I review my daily numbers, I get to see a traction which is more on those lines. So that gives me the confidence that perhaps we should continue to see growth around the same numbers, or maybe a little better also.
And what kind of projection you have for the current financial year credit?
I expect that it should be somewhere in the range of 14 to 15%.
On the credit part, what is your view on wholesale loans? Do you think there is project demands for wholesale loans?
We have pipeline which is about 4.5 trillion, 4.7 trillion to be precise. And that is a very clear reflection that people have evaluated the investment opportunities, and they have already reached out for seeking the sanction for the proposals. But this number will not show up immediately as far as the credit growth is concerned. There is always a tendency. Majority of them are the term loans. The term loans will get dispersed over a period of time. And also there is always a lag between the sanctioning and the disbursement. But the more important indicator for that would be if we look at the kind of investment commitments which the corporates have made. In the year financial year 22-23, this investment commitment was to the tune of about 35 trillion. And the year prior to that, in the year 21-22, it was to the tune of about 22 trillion. Okay. And this year, in the first half of the financial year, this has been to the tune of about 20 trillion. Okay. So, when I look at this data, it augurs very well in terms of the likelihood of the investment getting reflected into the bank's loan book also, but it will get spread out over a period of time.
What is the amount of bad loans you want to sell to the ARCs in the remaining months of the current financial year?
Much of it depends upon the kind of offers which we get on such loans. We evaluate all possible options. It would be compromise, it would be ARC, it would be NCLT, it would be DRT. All options are evaluated, and based upon that, we take a call where we are in a position to derive maximum value. We normally resort to that route.
But do you have a ballpark number how much you want to sell to ARCs?
No, we had for the current year we had decided a recovery budget of about 8,000 crore, and hopefully we should be on track.
On that note, Mr. Khara, thank you so much for speaking to Business Standard. It was a pleasure talking to you.
Thank you very much. All the very best.
Some very interesting points there by the chairman of India's largest public sector bank. In October this year, the Reserve Bank of India set up an external working group on the expected credit loss or ECL-based framework for provisioning by banks. The development came in the wake of a January discussion paper by the central bank on shifting to the ECL model from the incurred loss approach, with the aim of making the banking system more resilient. But what exactly is provisioning? Let us find out.
The lender is exposed to credit risk if the borrower is unable to pay back the loan they have taken. Thus, the RBI employs a number of mechanisms, including provisioning, to deal with the challenges of credit loss and bad assets. In India, banks are required to set aside funds for a percentage of their bad assets. In simple terms, this is provisioning, and its aim is to cover risk. The RBI establishes the guidelines for provisioning, which is the practice of banks setting aside funds from their capital to cover potential losses due to bad loans or non-performing assets. Why is provisioning important? It is crucial because it strengthens the bank's balance sheet by first recognizing and then mitigating credit risks. The central bank's guidelines make sure that lenders maintain the necessary reserves to maintain financial stability and absorb any potential losses. Banks also undertake provisioning on retirement benefits. Ultimately, provisioning safeguards the interests of both depositors and lenders. Based on their performance, loans and advances are categorized into various asset classifications by the RBI, and each category has specific provisioning requirements attached to it. This is done to account for the specific level of risk associated with them. The categories are as follows. First, there are standard assets, which are loans that are performing as per the terms and conditions. Depending on the type of loan, banks have to maintain a minimum provision of 0.25% to 0.40% in this case. Second, there are substandard assets, where a defined weakness or default in repayment is visible. Based on the duration of the default, banks are required to maintain a higher provision, ranging from 15% to 25% for this category. Third, there are doubtful assets, which are assets that have been classified as substandard for a specific period and where full recovery is doubtful. Again, depending on the duration of the default, provisioning for such assets ranges from 25% to 100%. The fourth and last category is that of loss assets, which are considered irrecoverable. In this case, banks have to make a 100% provision. Ultimately, proper provisioning strengthens the ability of banks to withstand financial shocks. Last but not least, it increases the banking system's resilience to economic downturns.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Provisioning indeed is crucial as it strengthens the bank's balance sheet by taking note as well as steps to mitigate credit risks. While the banking sector has been in good health, the drop in provisions is a healthy sign. 21 of 32 listed banks have less than 1% NPAs. But what are the risks and how long will this run continue? Tamal Bandyopadhyay joins us to discuss this in our expert take. Hi Tamal, welcome to the Banking Show. Your column this week is talking about the banking system's health. Briefly, can you take us through what is it that is going for the banking system's health and what are some of the red flags that we have to watch out for?
Thanks, Ruchika. Yes. In the last financial, the entire banking system net profit was record high. And if you see in the June quarter, they continued. And the September quarter is yet another great quarter, if I may say so. Also, banking system's profits are pretty high. And other part is this, of course, the NPAs are going down, both gross and net. In percentage term, many of the banks have less than 1% NPA. It's a decadal best balance sheet, I would say, when you look at the quality of assets. But then if you see that the operating profit is not in line with the net profit, so where is the catch? The catch is one of the contributing factors to their net profit is the lowering of provision. So since the NPAs are pretty low, they don't need to provide for as much as they had to in the past. So this is what the broad outline of their health. But if you look at some of the other parts which are not so great, is this the low cost CASA, which is current and savings account, has been down because savers are looking for other opportunities of investment, like shifting to FDs, mutual fund, direct equity, etc. You also see, because as a result of this, the net interest margin, or NIM, is under pressure for many banks. And then finally, the credit growth for quite a few banks are much, much higher than their deposit growth. So whether they will be able to continue with the good run, we need to see. Apart from the fact that there are, in some cases, which is in public domain, the personal loan segment, particularly the retail segment and unsecured loans, has not been in the best of health. So we may see some issues getting. Yeah, I mean, let's say.
Well, Tamal, RBI has also advised banks about these unsecured loans, and they are acting on it as well. You mentioned about the NPAs. Now, in your column also, you have said that many banks have less than 1% NPAs. How long do you think this story will continue?
Well, the NPAs, it's indeed the banking system is in the best of health for over a decade now, as we speak. But NPA also is a question of math. If your balance sheet is growing, so in percentage term, both the gross and the net NPAs have to go down. Now, if as and when your loan portfolio gets the growth falters, and because of you have not been able to grow your deposit portfolio, so in again playing the same mathematics, your NPA will be high. So that's the pure mathematics or arithmetic, whatever you're saying. Other part is this, of course, there are, even though no bank will admit it openly, they will all say it's pretty good, we are taking care of it and all. But if you see it in certain segments, the pre-NPA stage, from they are not yet turned NPAs, but there are people have been defaulting in paying back for 30 days, 60 days. NPA it only becomes when it's defaulted in payment for 90 days, more than 90 days. So that pre-NPA stage, I'm sure of any technicalities I'm saying, we are seeing in certain categories in certain banks. And of course, the much bigger challenge is, even did you ask for it, I'm saying that ramping up their deposit portfolio. If the deposit portfolio they have not been able to ramp up, then how long? Those who are well capitalized, they can support the credit growth through capital, but they will not be able to continue with it for long. So NPA will go up. It's just a question of arithmetic.
Well, we have to watch out for this pre-NPA stage that you're talking about very carefully, and of course, as growth falter.
What we call it technically called delinquency.
Yeah. Now, we're talking about some macro issues now here. We're talking about growth. What do you think are the implications of this recent appreciation in the rupee and the way the 10-year paper yield is performing? What macro implications we have?
Yeah, Ruchika, is very important. Two key points you're talking about the market. So one is the currency market and one is the bond yield. Now let's talk first about rupee. Rupee's lowest is 83.40 in recent past. And then since then, it's been hovering around 83 plus. Okay, and it even got beyond 83, it's actually 82.90 in their 90s, 94, 95 a dollar. That's the kind of thing. Now, why rupee is strengthening? It's primarily because of the dollar weakening, and I mean the dollar index weakening. And why dollar index is weakening? Because it's now pretty clear that U.S. Federal Reserve has come to the end of the rate hiking cycle, and only we'll see rate cuts, probably 3 rate cuts of 25 bips each in the next year. And that's for the rupee part, why rupee is strengthening. And the other part, you said again, the 10-year bond deal, 10-year bond deal, which again had its highest 7.39, and now early this week, it was trading at 7.14. It came down even less than that. That's a good story. So it will help the government to complete its borrowing program. It will be good for the system. But again, why it's happening? Again, they're happening the same reason, because of the U.S. Federal Reserve coming to the end of the rate hiking cycle, and the expectation is this: it will go for cut 1, 2, 3 cuts. So because of that, what's happening is this 10-year US bond also coming down, and it's coming down much sharper than 10-year Indian bond. As a result of this, the space or the gap between the two has been widening, which was at which came down very narrow to 214 basis point. As we speak, it's now around 325, 327, varying around. That makes investment in India more attractive.
Yeah, well, there are a lot of positives and some word of caution also from you on various things that we have to be watchful for. Banking system health is very good, but as you said, NIM is under pressure. And of course, about the NPAs as well, as you've mentioned, we have to be watchful of certain segments. Tamal, as always, bringing us a very balanced picture of what the things are looking like. Thank you so much for joining us today. We'll see you next week. It is time now for our poll results. Here's what we asked you last week. Should RBI hike UPI limits for all transactions? 75% of our respondents said yes, the limit should be hiked, and 25% said no, it should not be raised. The Indian Bank Association and Bank Union signed a memorandum of understanding recently for a 17% hike in the wages of public sector bank employees. But is this a fair practice? And should each bank decide salaries based on their individual performance? So, here's what we are asking you this week. Should public sector banks be allowed to decide employee salaries? Our poll is open today, that is Thursday, and you could respond on Twitter, Instagram, LinkedIn, and our website. That is all we have for you today. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.